Welcome to TradeTheMBI.com. This is John. This report is for the 20th of March, while the Fed came through and basically said nothing other than that they're just kind of keep a sideline view of things, but they expect that, it's inflationary because of the tariffs. And so we got their real understanding. They believe that tariffs are inflationary and that they're not going to be a party to any of it. And so they're just going to keep on the sidelines, but quietly behind the scenes, they're just not going to, reinvest as much as they normally would as far as taking away from the balance sheet. So that's a form of, quantitative easing in a backdoor sort of way without actually promoting anything. Market's happy with that because it just means that the Fed isn't going to be in their way as much, and the idea of inflation from their standpoint is net positive. So, market popped up from that, and it was no surprise. We were already seeing Magenta leading on it. We'd already had DOC here from a green crossing over cyan, which meant that the bulls had taken over from where the shirts. We weren't expecting a whole lot because we're still pretty difficult here on the shakeout reading, struggling to get back up that. But it was enough. Once we got above the 23%, I was able to hold there and popped up quite a bit, but came back and found support right back at it. And then you can see in the post market here, they're still pushing right back towards where those highs were. Very consistent with what we would expect. The NASDAQ, again, we said would be weaker, and it definitely was. It hit that 23 and couldn't really do a whole lot from it, and still has MBI white leading. So the potential for a short cover in that is still built into it, and really depends on whether or not the S&P can continue to drive things forward. But that could be a pretty sharp increase towards the 38% for the NASDAQ if there is some momentum to it. You can see on the DOC just starting to. The problem you get is this, that failed reset of the DOC steel and continuing to ride at this particular point. Yes, it can pop up above the 13. That gives it some support to push, but until you get a reset, it's not going to matter that much. It's just going to be a little bit of attempted pushes with plenty of selling in between there. So treasuries from their standpoint really couldn't do much with what the Fed is saying. They're not going to adjust rates in any way. So they're also not easing rates at this particular time. And it now becomes a question of which economists think that inflation is going to rise versus not. And that's going to be the play that happens in between, because you're going to have differing camps on this. The broad, consensus is that it's inflationary, but again, in a myopic view that assumes there's no other product to buy at a price relatively close, and these tariffs are far in excess of where American-based products would be for similar things. So it's just too myopic a view. Now, if it's closed industry where you only have a few items that can be bought from various people, be one thing, but it's not really what's happening. From an oil standpoint, still unable to break down below this, even though you see gas prices have dropped dramatically. Well, even, the practical things, eggs, things like that have gone down significantly. That's going to be a help, but you still need this broader energy number to decline. It's going to be tough too, because we talked about this. You've also got the fact that you've built in that inflationary thing, so you have the devaluation of a dollar relative to it. So what is the new baseline where $40 or $30 a barrel, maybe 50 is about as low as you can get from a full production standpoint, given the increases that we've seen. So you have to take that dollar devaluation into account as well. The euro still riding high. They're so happy. They love everything that's happening in the Eurozone. Never mind, they have no growth or anything like that. Doesn't matter. But the market's still reflecting that gold is the best place to be because they haven't been able to get any action out of crypto. And no change in that. There could be a little bit of softening we see in between the gold setup at this particular stage. We do have the positive extremes that will need to get refilled. And those go all the way back to the original breakout right there, just around 2,950 range. So that's still built into the equation. It's just a matter of waiting for the proper signaling from it. But for now, still holding up. And for good reason, unless you saw oil taking a dive. Now, that could change pretty rapidly, though, and this is something that's got traders on edge, I guarantee you. This idea that you could have a difference between what is going on in the overall global trade could change pretty quick if sanctions are lifted and that kind of thing is altered. So there's that reality of it built into the scenario. And from an ETH standpoint, likewise, nothing here. Bitcoin isn't even able to do a thing. So can see from the intraday, we had the NBI white spike, but as we pointed out, with magenta leading, that's a short rally cover, and in fact, took us right to the 100%. Actually broke past the 100% within that configuration, and now you wait for the next setup with NBI white spike, and that one will have a little bit more of an impact to it. But all in all, pretty easy to see how that was going intraday. It was mostly bullish once it started out. We had a couple little fades going in between there. And again, this is what we talked about with the call and put trade situation that has to be balanced in between. And then the skyrocket towards the end of the day as the Fed construct was digested. And you can see here in the post market, not a whole lot of unpleasant activity, mostly to the upside, and just keeping it kind of soft. So everything's pretty clean. As always, though, anything relevant, I will put on the Skype chat for you. But keep going with following the readings. It's been doing fantastic. Have a good one.